Oh, yeah. It's another double dipper today. We're going to be looking at a couple, a couple different earnings. That's right, a couple different earnings. I can't wait. I hope you can't wait either. My goodness. We're going to start off with, you know, Activision. Why not? They reported earnings Thursday after the market closed, and now they've opened up down 1%. Nothing major, not a major move. There's been a lot of big moves this earnings season, I would say. This little Activision guy certainly is not one of those major moves. So looking at the numbers, beat by 9 cents on a non-GAAP EPS standpoint, and a GAAP EPS standpoint beat by 20 cents. Okay, they're not cheating with their accounting, I promise. Net bookings of 1.21 billion. That's the revenue, down 12.3% year over year. Pretty well flat in terms of their estimate, so they're right on target with their estimate. Says be by 50 million, but that's again not much for, compared to 1.2 billion. 50 million. It's not that significant. So then, as a result, things were down. Which makes sense. Activision has turned 2% lower post-market after its Q3 report, where it topped analyst expectations but provided lukewarm guidance. Lukewarm. Net bookings dropped, from 1.66 a year ago. Net bookings from digital channels were 0.98 below, down from 1.44 below. In-game net bookings of 0.71. Non-GAAP operating margin was 27%. Recent launches have enabled significant growth in our size audiences for our Call of Duty and World of Warcraft franchises. As we introduce mobile and free-to-play games based on our franchises, we believe we can increase audience size, engagement, and monetization across the wholly owned franchises. That's right. Overall, monthly active users came into 316 million. 36 million at Activision, 33 million at Blizzard, 247 million at King. Woo! Operating cash flow is 309 million. Not bad. Again, love making some cashish. Guiding net bookings of 2.65 billion, which is versus an expected 2.7. It's not that bad, all things considered. Adjusted EPS of 1.15 bill per share, $1.15 per share. Don't know what I'm saying. Light of expectations of $1.27 per share. So yes, it is a little bit light of a quarter. Before I get into some of the fine details, I did want to say some of the things that they have to consider for this quarter coming up. Obviously, the new release of Call of Duty Modern Warfare, which is one of the fastest selling games we've had in quite a while, so it's a significant thing to consider. They've also got Diablo 4, which they just announced, which we shall see what happens there. Who knows when it'll be released, but then again, it's something for the future of the company, Diablo 4. People have been very much waiting for Diablo, and they kind of got screwed over when they went to Diablo Mobile a couple of years ago, and people were very excited about a new Diablo game, and they announced Diablo Mobile. But here's an official Diablo game, so we'll see how that goes. Let's get into these numbers, some good ones. We love looking at the numbers. Let's see. For the trailing 12-month period, operating cash flow is 1.91 billion. I love making cashish. We love talking about cash. You know that already. Overall, Activision monthly active users 316 million. Nice. Activision Blizzard exceeded its third quarter outlook, driven by better than expected performance from Call of Duty and World of Warcraft. Again, World of Warcraft Classic came out, so it's a big deal. As well as favorable cost timing, the company started the fourth quarter with successful launch of Call of Duty Mobile and Call of Duty Modern Warfare. Again, these are things to look out for this quarter, so it'll be benefiting them. And achieved important milestones for several of the franchises. Activision Blizzard is intent on building on this momentum as the company invests in the fourth quarter to maximize the potential of its franchise in 2020 and beyond. That's right. In the third quarter, Activision had 36 million monthly users. Black Ops 4 reach and net bookings from in-game items grew sharply versus World War II in the third quarter of 2018. Look at that. Call of Duty Black Ops 4. People still playing it even though the new one's coming out. That's right. Very much a, buy your own style kind of thing. Not a huge fan of these type of microtransactions, but a lot of people, they deal with them. On the October 1st launch of Call of Duty Mobile saw 100 million downloads in the first month. Top mobile app download in 150 countries and regions. 4.9 star rating in the U.S. iOS store. That's right, they mentioned specifically the iOS store because that's where they had the highest rating, so makes sense. On October 25th, Call of Duty Modern Warfare launched and became the top-selling new premium game release of the year. In its first week, sell-through units grew a high teen percentage versus Call of Duty Black Ops 4 with strong console growth and PC unit on Battle.net, which is Activision's Steam almost, whatever their service for playing your games. Okay, so from Blizzard's perspective, World of Warcraft drove biggest quarterly increase in paid subscription plans. That's right. In franchise history, by the way. So everyone's into World of Warcraft Classic right now. It's the old version, but new. Overwatch League concluded with a sellout crowd of over 11,000 fans watching in San Francisco. Shock defeat the Vancouver Titans. Spoilers! I wanted to watch that. I didn't want to watch that. In the Wells Fargo Center in Philadelphia in September. That's pretty cool. Season 2 average minute audience grew 18% year over year. Again, esports is... I hate calling them esports. Video games played professionally are definitely growing significantly. It's a thing that's going to take over. It's just something people want to watch, People watch it all the time on YouTube, stuff like that. Now they can watch it live in person. It's something that's going to happen. At BlizzCon on November 1st, Blizzard revealed some of the new exciting content on its pipeline. Hearthstone Descent of Dragons expansion, set for release in the fourth quarter. Not bad. New Battlegrounds Auto Battler mode, which is in early access. World of Warcraft's next expansion, Shadowlands, is going to launch in 2020. Overwatch 2. Diablo 4. Exactly. And Diablo 4, these are the highly expected ones. King had 247 mobile active users. Candy Crush franchise mobile reach grew year over year. Again, I'm telling you this. It's crazy. People still playing Candy Crush more and more than ever before. How's it possible? The game's been out for years and years and years. It's been 10 years. Driven by addition of Candy Crush Friends Saga, which launched in October 2018. Candy Crush was once again top grossing franchise in the U.S. mobile app stores. How did they do it? I don't know. Advertising continued to grow profitability. Again, mobile advertising keeps rising. Not bad. So, for the cyclical year 2019, here's their net revenue outlook of $6.315 billion. Not bad. EPS outlook of 1.56. And fully diluted shares of 772 million. And Q4 they're expecting 1.812 billion. EPS of 0.29. Same amount of fully diluted shares, really. Not bad. Nothing absurd. They're, all things considered, I think this was... it's not a bad quarter by any means. I don't see anything, any issues with this quarter. That's my perspective on the matter. You see here, obviously, 9 months ending. a little bit of decrease in product sales, a little bit of decrease in subscription licensing and other revenues, which you can't expect to not see. So nothing absurd there. Net income declined just a little bit again. Again, that's just due to less revenue. You can't expect to make more money, but again, that's a good net revenue line. I appreciate that from them. It'll help them keep paying out their dividend on a biannually basis, and we'll see. Cash and cash equivalents went up. I love seeing that, 4.9 billion. You know I love it. I love seeing that. Long-term debts of 2.6 billion. So again, their cash outweighs their debts by a factor of at least 2 times. So I like that a lot. These are numbers I like to see. Again, revenue declined a little bit, but I think there's plenty of ground to recover. And video games have been hit so hard lately, and I think that's really put a damper on this stock. They just need new consoles to release, and I think that'll reinvigorate the business. So next year we should be seeing a pretty good year for them, hopefully. That's about all I got for you for Activision. I hope you stay tuned for next video.